Welcome back, guys, and now let's get ready for episode number 2 of my 12-week series. And today I want to talk to you guys about something interesting. So today's video is going to be about understanding probabilities and why not being right is so important. Let's jump away with episode number 2 of 12. In today's episode, I want to focus on your mindset, because this is something that I wished when I started, I really focused on a lot more. Instead of focusing on all the other fluff, I really wished that I would have focused on this specific one. So out of the entire series, all 12 segments I'm shooting, I feel that this one is very important. So if you have anything else you want to do, then pause the video, go and do it, and come back and watch this video when you can sit down and you can truly digest what I'm about to say. Because the reality is, I'm going to show you why being right is overrated in trading. With each one of these videos, I have a specific objective that I want to achieve with it. There's a specific thing that I want you to get, and it's a shift that you need to make. So for every single one of these episodes, there is a shift that I need you to understand. We're going to take you from one way to another way. And in today's video, I want to shift you from asking yourself the question, was I right, to rather asking, did I execute my edge or my system as I should have? So that's the mindset shift that I need you to make today. The reality is, the market does not reward you for being right. It rewards you for managing risk over a large sample. If you need to be right to feel confident in trading, you are never going to be lasting long in this game. That much I can guarantee you. Because the reality is, trading is not about predicting. It is about probabilities. Here is the biggest mental trap that every beginner or unprofitable trader steps into every single day. As human beings, we crave a certain level of certainty. We want to know before we do this thing that whatever we are going to do is going to work out in our favor. Otherwise, we are a lot less enthusiastic about doing it. And why is that? Well, the reality is, it makes you feel good. You feel good when you get it right, when things are going in your favor, and you feel the opposite when things don't go in your favor. The reality is, markets are probabilistic, not deterministic. That is such a deep thing. When I heard that the first time, it didn't make sense. But I would highly urge you to go into ChatGPT, type this part, type it in, say, markets are probabilistic, not deterministic, and see what it says. Most traders are not trading a system. They are in fact trading their need to be right. Unfortunately, we are driven by the instinct of being right. If things are not in our favor, we don't want to do it. If we don't have the statistical edge, then we don't want to do it. But unfortunately, trading is one of those industries where everything is random. Your results are random. Nothing is predictable. The only predictable thing is your inputs and what you do on a continuous repetitive cycle. Now, let's talk about win rate versus expectancy. Now, what is a win rate? To put it as simple as possible, it is the amount of trades that you've taken. So let's say you took 50 trades. You will then look out of those 50 trades, if they were all taken with the same parameters. Now, this is very, very important in a win rate, is you have to have the same entry requirements. Because the moment you start fiddling with entry and exit and stop loss and TP, then you are randomizing your results. You don't have key results. And this is where a lot of people get stuck in their win rate. So, but just for simplistic reasons, what it means is if you've taken a total of 50 trades, they were done exactly the same way, then you would get a result. You would have X amount of winners and X amount of losers. What you're going to do then is you're going to take the amount of winners, you're going to divide them by the total amount of trades you've taken, and you will get a number which you will multiply with 100, and that will give you your win rate. Now, win rate is an important statistic in trading, but it is not the most important statistic when it comes to trading. Now, what is expectancy? Because this is the number that no trader really talks about. I think on TikTok and most of the platforms, I have heard very little, almost none of the traders there, the big guys, I've heard talk about expectancy. Let me break it down for you. Now, expectancy is after you've got your win rate and you've determined all of your statistics, you will then run your trades through a specific system. And if you don't know how to do this, then I would highly suggest you jump onto my Telegram or onto my Discord, because I teach you how to determine your expectancy. Now, what expectancy tells you is it will look at how many winners you have and how many losers you have. And then it will take that and it will look at what was the average size of your winner, what was the average size of your loser, and then it will calculate and give you an expectancy per trade. So over those 50 trades, you will have a certain expectancy. Now, this is very important to understand, that the more detailed you can be on the input, the better the output will become. What do I mean with that? Well, if you are able to record your trades exactly to the cent, for those 50 trades, including taking out the swap fees, taking out commissions, whatever the prop firm or whatever your broker is charging, and you can work as specific as possible, you're going to get an expectancy rate. Now, an expectancy rate is going to tell you what can you expect for every trade. But Marty, I have losing trades, so how can I have an expectancy? Very simple. You are now focusing not on how many winners and losers you have, but you are rather focusing now on how many trades did you take and what was the expected rate of return. Now you have shifted from the losing side to the winning side, because we as professional traders look at the expectancy. If we are going to go into the market and we are going to take another 50 trades just like we did, we don't care how many are winners and losers, because we know that the statistics are random. What we care more about is how much are we making per trade? Because here's the reality. If you're focusing on losing 50 and making 100 every single time, that noise tends to eat you up. But if you now know that out of all those trades, every single trade paid you for $45, for example, $45, winner or loser, you're more inclined to take the trade, because now you're focusing on actually taking the trade rather than which one is winning and which one is losing. You now have an expectancy and you have some sort of idea, which is a lot more concrete than a win rate. Now, let's look at two systems. Let's say we have system A and we have system B. Let me break down system A. So, system A has a win rate of 80%. The average win is 0.5 R. That means 0.5 risk to reward. The average loss is 1 R. So pretty much it's a losing system, because you have to have a very, very high win rate in order to cover every single loss that you make. But now let's look at system B. System B, on the other end, has a 40% win rate. But the average win is a 2.5 R. And the average loss is 1 R. Now, this is a winning system. Now, how does that work? It's because on this side, this person is either closing their trades early, or things are going wrong, or the strategy is not well defined. So when they're winning half of what they are losing. So when they lose, they got to make up 3 trades in order to get back to break even. But with system B, although their win rate is a lot lower, their risk to reward and how much the expectancy is per trade is a lot higher. So this is how you're able to determine where your system fits in. The next thing you need to focus on is sample sizing thinking. Stop thinking of individual trades. Stop thinking of everything in isolation. Start thinking bigger picture. How many trades do I take? Look at your statistic from a wider lens than up close. It's so important to do this, because the reality is this is where most traders crash and burn. See, individual trades means absolutely nothing because the market is random. Every single week is different from the previous week. We do not know which way the market's going to go. We have interest rates, inflation, we have NFP, CPI, PPI, so many things that can affect the way the market goes. So how do we create order out of this chaos? The reality is your edge will only show up after 50, 100, 200, 300, maybe even 500 trades. That is where you're able to determine your edge and really be able to sit down and say, okay, this is my edge and this is where I actually make money and this is how I make money. And by doing such a large sample size, you actually train your brain and your eye to see your setup. That's why we as professional traders that are profitable keep doing back testing over and over. I don't do back testing because I want to find a new strategy or want to find something new. I do back testing because I want to train my eye on what I need to look at, so that when I look at the charts, I can see my setup performing without anything else telling me that my edge is about to play out. But the reality is, if you are only looking at 10, 20, 30 trades or 45 trades or 50 trades, that's not a big enough sample size. 50 is something you should be looking at if you are swing trading. Scalping, you should be looking at 500 trades to understand really what your edge is. Judging a strategy after 5 trades is the same thing as flipping a coin for 3 times and now you have determined which one is more, heads or tails. Does it really make sense? I mean, the reality is you can still do everything right and lose. But guess what? That's normal. It's normal to lose. Can we in 2026 learn that it is normal to lose in trading? Now, this is something very important that you need to listen to very carefully now. Random distributions of winners and losers. Let me say it again. Random distribution of winners and losers. What does that mean? It means that things won't always stay the same in trading. Just because you had 3 winners and then had 2 losers, and then you had 5 winners and you had 2 losers, does not mean that you are not 1 trade away from a 5-streak losing streak. That's the part you need to wrap your mind around, is that things are random. The reality is, if you are going to base your emotions and your trading style on having only 2 losers or only 3 losers in a row, you are setting yourself up for emotional disaster, because sometimes your edge is going to flunk, and when it flunks, it's going to flunk bad. The crucial thing to answer during this period is, did I plan for this? Losses don't arrive evenly. Never. Losers will knock you right off your seat. You will have a month where you had almost no losses, and the next month you are taking losing streak after losing streak and not understanding why. Well, today I'm teaching you why. Because losses are not evenly distributed. They will show up when you least expect it. And the reality is your winners cluster different. Just because you had a predictable 3 months that had the same sequence does not mean the next quarter is going to be exactly the same. You need to mentally plan for that, and you also need to mentally plan your account for it. So that's why over leveraging is such a dangerous thing in trading, because the reality is losing streaks are mathematically unavoidable. What do I mean with that? Losing streaks are mathematically, with math, I can prove, no matter how good your strategy is, that losing streaks are going to happen. Period. Because that is how the law of randomness works. And if you cannot wrap your mind around that, you are going to struggle, and you are constantly going to hop from strategy to strategy, thinking that you need to find the new edge. You got the edge. You're watching my channel because you have the edge. You just need someone to help you to stick through your edge. And that's why I'm here. To give you guys some background, my worst losing streaks happened during my most profitable times. Whenever I had the worst losing streak, it would be followed by such a nice rally and such a nice growth in my account. I can't tell you why, but that is what I found statistically. So whenever I do face those periods of drawdown, I do know that on the other side, it is going to bring me back out, and I'm going to climb my account even higher than before. Okay, Marnie, you've said all of these things now. What can I practically do? Well, first I'm going to do is I'm going to give you things that are unavoidable. You need to ignore these things. Get away from it. Move your mindset away from it. You have to ignore this. High accuracy marketing. What do I mean with that? I'm going to break it down in one single sentence for you. If accuracy mattered, casinos wouldn't exist. I'll let that sink in. Second one, predictive thinking. Avoid it at all costs. Here's why. Number one, there is no certainty in trading. If someone comes up here and says, I know what the market's going to do, I'm highly skeptical. I'm very, very skeptical. Get away from this mindset is, no, this has to work. No, it does not have to work. And you need to stop that thinking. Like, oh, I need to keep doing this because at some point this has to work. Stop that mindset. Number three, no emotional attachment to outcomes. You are there to perform the setup. You perform the setup. You perform the setup. If it works, it works. If it doesn't work, you walk away. No emotions. Winner or loser, it doesn't matter. I need to trade. My system is as follows. I know if I take 50 trades, this is how much I'm going to be making. That's what I'm going to focus on. The reality is, the moment that you need a trade to work, you have already lost control. Now here is the core, the anchor of what I just taught you. A losing trade can still be a perfect trade. If you followed your rules, you stuck to your entry requirements, you put your stop loss where you would have put it, you put your TP where it is, and the trade goes against you, accept it as normal. Don't think there's something wrong with you. Don't think there's something wrong with your strategy. It's still there. It's just one of those things. What you need to focus on from this day forward is you need to focus on, did I execute as I was supposed to? Did I tick all of my boxes? Yes, I did. Good. And detach from the outcome. Now, if you guys know me, you would know that I love practical exercises. I like to take the things that I learn and I like to apply it practically into the trading environment. So here is your practical that you need to go and do for the next couple of weeks, right? So whenever you watch it, this is what I want you to go and do. So for the next 20 trades, I want you to do the following. I want you to stop asking yourself, did I win? I want you to focus on a step-by-step process. This is what I'm looking for. This is what I'm looking for. This is what I'm looking for. I execute. I want you to stop recording winners or losers. I want you to start recording. Did I follow my rules? Did I execute as I was supposed to? So for the next 20 trades, that is what you're going to focus on. Yes, in your trading journal and in your history, yes, there's going to be the profit and the loss and everything. But for the next 20 trades, can you just focus on, did I follow this strategy? Ask yourself that question every single day. Did I execute as I was supposed to execute? All you got to do, just for the next 20 trades. And very important, stop grading your trades on your P&L and your all of these other factors, and start grading your trades. Did I follow the rules? Did I do what I was supposed to? Start giving yourself credit, even if it's a loser. Say, I followed my rules. You know what? I didn't revenge trade. I followed my rules. You know what? I didn't move my stop loss. I followed my rules. You know what? I left the trade to TP. I followed my rules. This is a successful day. Start rewarding yourself for following the system than rewarding yourself for the outcome and how much money you are withdrawing every single month and week and that. The money will come when the execution is done correctly. Now, once you understand the section on probabilities, which we just spoke about, the next logical step will be towards focus. Because what is it worth that you understand probabilities, you're focusing on execution, but you lack focus? Because spreading probabilities thin is how you're going to stay average. We need to get you from average to success. That's where we're going. So in episode number 3, why I would only trade one market for 1 year. That is the next drop in episode number 3. All right, guys, I really hope this is going to help you to become profitable. If you are profitable, to make you even more profitable. If you're struggling, to take you to profitability. The idea with this episode is the 12 things that I wished I had focused on a lot more when I started trading than what I originally focused on, because I just focused on the wrong things, and it took me about between 6 to 7 years to become profitable. Now that I'm profitable, it's easy. So what I want to do is, I don't want to talk to you guys about a strategy, a win rate, and all these things. I want to talk to you guys about the real things, the things that are going to move the needle for you, that's going to get you prop firm accounts and keep prop firm accounts. I can get everybody to pass a prop firm account, but for you to keep that prop firm account is 7 times harder than anything else. So that's what this series is about. If you enjoyed this, you liked the video, please give it a thumbs up. Guys, drop your comments in the bottom section. I will answer all of them. I love engaging with you guys. You guys are awesome. And if you watched the video to here, then you are serious about 2026. So I would love to know more about you. Send me a message. Get onto my community. I've got a Telegram channel. I've got a Discord. Yes, we are developing all these things over time, but I would love for you to be part of the community, because this year, I'm not focusing on the money I'm going to make. I'm focusing on perfect execution. So by the end of the year, I want to be able to open up my journal and say, I had a 98% accuracy. What do you mean, buddy? 98% accuracy when it came to executing my strategy. So as always, guys, please give this video a thumbs up if you enjoyed it. Hit that subscribe button and do hit the notification bell, because I am going to be dropping at least 2 videos a week and you don't want to miss it out. I've also got my vlog that I'm doing, showing you guys what it's like being a real trader, being a mom, a trader, a business owner, and trying to get fit and healthy and all these beautiful things. And then at the same time, I'm also dropping educational nuggets like this. And as always, guys, you can catch me on TikTok, Instagram, Facebook. Yeah, I'm on Facebook. I like Facebook. And you can also get me on Twitter, guys. So it's all, no, on X. Sorry, I keep saying on X, guys. Catch you in the next episode. As always, guys, happy trading.